Welcome to our Economic Developments and Market Movements update for March 10th, 2026. Today, we're covering the major events that impacted global markets, from oil price volatility to equity performance and currency shifts. Key market events included significant oil price volatility, an early downturn in equity markets, and a surge and subsequent fall in U.S. Treasury yields. We begin with the oil market, where Brent Crude experienced dramatic swings due to geopolitical events in the Middle East. The escalation of conflict in the Middle East over the weekend pushed Brent Crude opening price well above the critical $100 mark yesterday. The price continued to rise, reaching fresh highs following the selection of Mojtaba Khamenei as Iran's new leader. Market pressures later eased after the G7 committed to supporting global energy supply, and President Trump commented on the war. Brent fell to around $90 this morning. Moving to equities, let's look at how global benchmark indices reacted to these geopolitical and economic shifts. Most equity benchmark indices were flashing red during Asian trading hours, reflecting global market anxiety. In the US, the S&P 500 opened 1.5% lower but showed resilience, recovering most of the losses throughout the trading day. The bond market also saw action, particularly concerning the 10-year U.S. Treasury yield. The 10-year U.S. Treasury yield surged to 4.21% from Friday's close of 4.14%, as investors anticipated the inflationary impact of rising energy costs. However, as market concerns around the conflict eased, the yield subsequently dropped back down to 4.11%. Finally, we turn our attention to the currency market and the Australian dollar. The Australian dollar, or AUD, dropped below the 0.70 barrier yesterday, facing early downward pressure. However, the AUD rebounded today, rising to around 0.7070, marking a 0.6% gain for the day. In summary, today was marked by significant volatility driven by geopolitical factors and subsequent market corrections. The primary drivers included oil price swings, volatility in U.S. Treasury yields, and a notable rebound in the Australian dollar. Stay tuned for tomorrow's market update as we track the ongoing developments, particularly in the energy sector and global equities.